What's up, everybody? This is Investing Sensei here to bring you week 16 of the portfolio update. Before we get started, be sure to smash that like button, and if you haven't done so already, be sure to subscribe and hit the bell notification so you're notified when we release week 17 of the portfolio update. Alright guys, the other thing I did forget is this video is for entertainment purposes only, so I'll leave the full disclaimer in the description below. Alright, so I have the agenda here on what the video is going to cover. So we're going to go over how much money I invested this past week. Alright, and then we're going to go over to one of the subscriber questions that I got, and then we'll talk about that, and then we'll go into the M1 platform and look at the portfolio value, see how it's doing currently against the coronavirus, how the stock market's going down a lot. So we'll check out the value of our portfolio, how we're doing, and then we'll look at the activities, if we bought any shares, if we sold any, or if we got any dividends. So looking forward to that. And then we also got some emails on some of the dividends that actually got declared, so I'm pretty excited about that. Hopefully we get some dividend raises, so let's find out. So we'll start off with how much I invested this past week. So on the 30th of January, I ended up adding $500 to the portfolio, which brings us up to a total of $61,901.84 of our total money invested. This doesn't include capital appreciation or anything. So we're still trying to hit that 100K mark, and we're working on it. Over here on the right, we have the 2020 goals. One of the things that one of the subscribers, Shane, this is a shout out to you. Thank you so much for catching this typo. I did have a quarter misspelled, so if you look at the previous videos, you'll see that I had a typo. I was missing an R, so thanks so much for letting me know that. I corrected it. And then yeah, if you guys see any other issues, be sure to let me know in the comments, and then we'll fix those. Anyways, yeah, we're at $61,901, so that's really awesome. Let's go on to the subscriber question. So Mark Pohl left me a question of if I was not scared of the stock market crashing. And so I would show you guys the comment, but for some reason YouTube marked it as spam, and when I went to try to go approve it that it was not spam, I don't know where the comment went, and I started looking for it, and I was not able to find it. But anyways, here's the answer to that question. I would have responded, but I'm going to respond in the video. So I'm not scared of the stock market crashing. My goal right now is to try to save a certain portion of my income and try to save it so I can have some cash reserved. I'm putting this in a high yield savings account, as well as I'm always continually investing. Every 2 weeks I'm adding more money to my portfolio, so I'm trying to do the dollar cost averaging, so that it's really hard to time the market, and so I'm trying to just do the best of both things there. If the market does crash, then that even becomes better for me, because I'm going to get really good companies at a discount. So I don't see anybody that doesn't like a discount. I think it's kind of rough, when you see your portfolio in the red, but you just got to stick through it. And one thing that actually helps me a lot is that I'm invested in dividend growth investing. So let me show you guys the sheet here. So here's the sheet, and basically this is just tracking all the dividends that I get paid from the companies that I own. And so this is actually something that helps me a lot, is that I continue to get dividends every month. So if we look over here to the right, you'll see that in January, that's when I first started investing. I didn't get paid any money, but then over time I started continually getting more money. It doesn't matter, like right now, how the coronavirus is affecting the stock market. I'm still getting these dividends. The companies are still going to pay me the dividends. To me, capital appreciation is nice, but at the end of the day, I really want to get these dividend payments to a certain point where they're able to basically match my salary, where I don't have to work. But if we look over here at the quarterly dividends, you'll see that in 2019 Q1, I made $100 in those 3 months. And then the second quarter, I made $127. And then Q3, I made $226. And then Q4, I made $326. So you see this trend of it's going up and up. So, this 2020 Q1, it's going to be higher than 326. So I'm pretty excited about that. So give it a couple, maybe 5-10 years, no matter if the market's going up or going down, I'm still going to get those dividends. They're not guaranteed, but over time, the majority of the companies are always going to pay dividends in the companies that I'm invested in. And over here, you'll see the annual dividend. So, for my first year of investing, I made almost $800. So, 2020, I'm hoping to make over 2,000. I'm hoping. We'll see. We'll see how that ends up going. And if you look over here on my table here, you'll see that, I made for 2019, I made almost the $780. The money I invested was $60,000, almost $61,000, and then the portfolio value was actually $82,000. And my dividend yield was 1.28%. And then in gains, which is going to be the thing that fluctuates up and down, like right now it's going down, was 35% in return. But, I don't get these gains because I'm not selling them. I'm investing in these companies because I'm towards the dividend. And one other thing I want to show you why I love dividends is from the previous video. So let me pull that up. So this is actually one of the declared dividends for one of the stocks that I'm invested in. And they basically just did a 15.5% increase. And I did not do anything. This is just me holding great companies. And it doesn't matter what the market's doing. You see how I just almost got a 16% increase for doing nothing. So no, I'm not really afraid of it. I am trying to set myself up. I'm trying to save a small cash reserve. So when the market does crash, I'm able to take opportunity and buy more shares at a lower cost, and so I'm able to get some more dividends. My dividend yield will be a lot higher. So yeah, thanks so much for the question, Mark. Really enjoyed it answering it, and let's move on to the portfolio value, I believe. So let me double check. Yes, so we're gonna go look at the portfolio value and how it's doing even with the coronavirus. So let's jump onto that. Alright guys, so here's the portfolio value for week 16 of our portfolio. And so if we look on January 26th, we were around this area here. So we were at $85,866.60. We actually went down. So the total is $84,463.84. So our portfolio is still going down right now with the coronavirus. And, for me, it's just creating great buying opportunities, and that's what I'm doing. I'm not, panicking and selling out or anything, because at the end of the day, I'm getting these dividends, and actually, I'm buying these companies that are going to go back up eventually, so I'm just getting them at a discount. But if we look at the market gains, we're at $5,154.90. This is not accurate because of the money that I transferred over from my Robinhood account, and we'll go look at that in the holdings, so I'll check that out in a little bit. For the earned dividends, we are at $399.66. So, yeah, guys, just continue holding your stocks. And if you have money right now, buy some. You're buying them at a good price right now. So invest for the long term, and you shouldn't lose money. So let's check out the holdings so you guys can see the full value. So here I have the holdings, guys, and we have Apple, and we're at 88%. This has decreased in the capital appreciation, as well as majority of these other companies that I have in the tech sector. The one that's doing really great is, Tesla. Tesla's just on fire. We have 2.6 shares on this portfolio. I do have a lot more shares in my Robinhood account, but our average price on this one is $182, and we are up 257%. So that's awesome. Tesla's just on fire. I'm going to be holding it for the long term. I'm just bullish on Tesla. They're going to be doing great things in the future, 5-10 years from now. But anyways, guys, here, if I scroll all the way to the very bottom, we can look at the full value. So total invested, this includes stocks that I sold and that got appreciation as well. We're at $63,692.65. And then our portfolio value, again, is at $84,463.84. Just in capital appreciation, we're up $20,771.19. That's a total of 32.61%, which, this is really good still, but I'm just going to be buying some more. Right here, if I go up to the very top and I filter by the companies that are in the red, right now, something that looks attractive to me is that I plan to buy in this coming week is 3M, and I'm going to continue buying some more Cisco, and I'm going to be buying a small portion of Boeing just to average in while hopefully it goes down some more. I'm considering some Bank of America and some Altria. So we'll see what we end up doing this coming week. So I'm pretty excited. And that actually does it for the value of the portfolio. Let's check out the activities, guys. So I'm pretty excited about that. Alright, guys. So here's the activities, and I have it filtered out by January the 27th, 2020. So let's check that out. We have on January 30th, we deposited $500, which is what I showed you guys earlier. And we did on the same day, we did 10 buys. I was just couldn't resist myself, right? The value of the portfolio was going down, so I was just trying to average down. And so we did 10 buys. Let's see, we bought $386.56 worth of stocks. So if we look here, we bought almost $30 of Amazon, $40 of Wells Fargo, $40 of Honeywell, $20 of Boeing, which is what I've been doing. I've been trying to buy $15, $20, just averaging down. And then AbbVie, $30 of AbbVie, and then $30 of Bank of America, and then $30 of Pfizer, and then $60 worth of Cisco. And then 3M was also going down a bit, so I bought $80 worth of that, and then about $27 worth of EPR properties. So I did a lot of buying that this past week. Since I did deposit $500, I actually was going to go ahead and use, you see that I have $125 here available. I was going to end up, using $120. Well, I was going to invest all $500 and buy stocks, but I was like, let me wait for this coming week. And so on January 31st, JP Morgan actually paid us $3.56. And then that same day, LTC Properties paid us $1.59. So that's really awesome. I think it's like, we ended up getting about $5 or so. So over time, these dividends are just going to get larger and larger over time. But yeah, that wraps up the activity, guys. Let's look at the agenda and what we have left here. So let's look at the declared dividends. Let me pull that up. All right, guys. So we have 4 declared dividends. We have Wells Fargo, Starbucks, Bank of America, and Visa. And so one thing before we get started on this is that I've been getting a lot of questions on how I set this up. So I'm planning to make a video, basically like a tutorial on how to set this up if you're interested in doing it. So look forward to that. And if you haven't subscribed, be sure to subscribe so you're notified when I upload this new video. And also, just to help out the channel, be sure to smash that like button. It helps a lot, and I really appreciate it. All right, so let's start off with Wells Fargo. All right, so Wells Fargo declares 51 cents per share quarterly. They didn't increase it this time, but they'll be paying March 1st. And the ex-dividend date here is February 6th. So we still have about 4 days more to buy some more shares if we wanted to get paid on March 1st. So let's go on to the next one. So the next one is Starbucks. They declare 41 cents per share quarterly. They didn't increase it this time, and they will be paying out February 21st. The ex-dividend date here is February 5th. So we still have some more time if we wanted to buy some more Starbucks and get paid for this quarter on the dividends. So let's jump on to the next one. All right, and the next one here is Bank of America. So Bank of America declares 18 cents per share quarterly. They didn't increase it, and they will be paying out March 27th. And the ex-dividend date is March 5th. So we're pretty excited about this. This should, I'm always looking forward to more dividends. So let's go on to the last one. All right, and the last one here is Visa. They declared 30 cents per share quarterly, and they didn't increase it this quarter. So they will be paying out March 3rd, and the ex-dividend date here is February 13th. So we still have some time to buy some more Visa if we wanted to. So none of the declared dividends actually got an increase this time like last week, but that's fine. We're at least know how much we're going to get paid, and we're always going to get these dividends coming in no matter what the market's doing. So continue investing, guys, and thanks so much for watching. Look forward to that setting up these declarative emails if you guys are interested. I'll be trying to get that done very soon, and so be sure to smash that like button, guys, and if you haven't subscribed, be sure to subscribe, okay? The other thing is that if you guys like the Google Sheet, I do have that in my video description. You're able to make a copy of it, and then you can make it your own and change it or reformat it as whatever you want to do to it. And the other thing is that M1 Finance is running a promotion of like you get $20 and I get $20 if you sign up with my referral link. So if you guys are interested in that, you guys can do that. You'll help me out and you help yourself out. So starting investing with the M1 platform, I really enjoy it so much. But anyways, guys, thank you so much for watching, and I'll see you guys in the next video. So take care, and welcome to all the new subscribers. I'm really glad that you guys are here, and so I'll see you guys. Bye.